The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Monday through Friday, market days, 11 o'clock till noon, right at this time, at 877-927-6648. Love to take your calls. Very interesting fashion. This market pulls back down 100 points, and now it's up 32 in the Dow, up $1.16 in the S&P. We've got 18,069 for the Dow, 2110 for the S&P. Comp index is unchanged, 5,059. The gold contract is up 9 at 12.12. Silver is up 0.14 at 16.54. You got platinum up. You got copper at 277, just kind of stuck there. Crude oil is up 30 cents, also just kind of stuck there at 57.30. Bonds are down a point at 161 and 29.30 seconds, and the TLT is down 78 at 128 and 29. That is going to be very interesting to follow. We've got the dollar down 78 cents at 96.14. Now, a couple of things are going on. We've started to see the rotation take its toll to the downside, as yesterday the IBB took its biggest hit since, what was it, 26th of March or something like that. Huge hit to the downside. Hit again today, but coming back quite nice. They're only down 70 cents after going all the way down to the 338 level. Well, it was just a couple of days ago that was in the 368 area. So this is a huge hit, and it's suggesting that the rotational strength is starting to work its way into rotational weakness. And that's going to, it's a term that I've been trying to figure out for a long time. I thought of it, I didn't know if it fitted or not, because I needed to see how we start to get now. What do I mean by a rotational weakness and rotational strength? On the way up, we've had many high-level consolidations in the market by going to a certain point and then barely pulling back, maybe 4%, 5%, 6%. But during that time, it was just a period of rest, and some of the major sectors were taking a breather before going on to the upside. At the same time, there were a couple of sectors that had almost completed their full move and were about to go down further, but this was their opportunity to have a bit of a bounce. So that was rotational strength for a moment, and then it goes back to rotational weakness. What we're seeing now, if you look at the IBB has got a chart formation. Certainly the 120-minute chart gave a great, for my subscribers, we short via the one of the instruments. And this IBB, the biotech technology sector ETF, went to 368.25, a peak D in the Chapman wave a couple of days ago. What was that high? That was at on the 23rd. And then it came down very sharply. It went all the way down from 368 to today's low of 338. That is 30 points. That's almost a 10% correction in just days. Very unusual. It's done that before, but not in days, but it's done that. No, that was in days. That was back in March. So what we're looking at is that in the chart formations that we look at, and let me show you something here. There is still time to go to the front page of TFNN. Begins tonight, 2 free webinars, subscriber webinars. And if you're not a subscriber, you'll be able to sign up. You can get my newsletter for free for 30 days. And you'll be able to check out the I would consider them to be really timely, very important webinars. The first one is tonight. I'm going to go through the Chapman wave sequence of going from identifiable low bar. I wonder if I can just pick this up. I was working on it a moment ago. Here's an example. This is one of the examples I'll show. This is the Container Store. It came out with earnings yesterday. I hadn't even looked at this for ages. And I know I get from the Container Store, I get emails all the time. I didn't want to get emails when I was there a long time ago. I said, I don't really want to get them. I never use them. But anyway, I get them all the time, but I don't even look at them because there's just a few things that I get in the Container Store. And usually once you've got it, you've got it. So I haven't really been interested in. But look at the chart formation. I'm going to discuss the MACD. This is that tool right there. I'm going to discuss the slow stochastic. I'm going to discuss the 9-period exponential moving average, that black line there, that moving little squiggly line that shows support and resistance. I'm going to discuss the low bar going to a peak D, 4 higher peaks. So what did it do? It went 3 times to D. ABCD, capital ABCD, same thing, uppercase capitals ABCD, right to that top there, and then kaplop. And it yesterday after the bout was down almost 5 points, 22%. So I don't know where it is right now, but that's what I'm going to show you, how these things work. Look at the failure when it went to D. Look how the stochastic was starting to fail. So we will talk about that and go through it in great detail. The following webinar will be a week from tonight, and that'll be a follow-up of my 1929 match with the period within we're in right now. Now, I call it the period because if I knew exactly that on February the 3rd, 2016, we were going to make a top that was not just a top, but a generational top, that would be remarkable. No, I can't do that. It's not within my purview. I cannot do that. I can give you time measurements. I can say we could go out 6 to 8 months or even 10 months, and certain things can happen. This is what you've got to look for. But most importantly, if you are aware that there is a bubble being created in real estate in the Northeast, all this, I'm in Newton, Massachusetts. It's just unbelievable what's going on. There are very few houses for sale, and people are just vying. They're not even bidding. You get this surreptitious calls to say, hey, are you interested in selling your house? But most importantly, there's a building boom. And of course, I love building. I love buildings. I've been an architectural fan ever since my brother studied architecture in his youth. And so I followed all around the world. I look at buildings. I love buildings. But I have certain icons. I have one particular thing that I'm following, and I've been following it for 7 years now, as to when they are about to put the shovels in the ground. It's today that they put the shovels in the ground for this whole big complex that they're going to build. And I was invited. I was going to go, but my webinar's tonight, so I won't be able to go. They did the same thing in 1929. So I'm watching this really closely. All right, so that's what I'll be discussing, the parallels and what we can look for and what the market should do under these circumstances. And that's going to be a week from tonight. And I'll be discussing, look, the IBB, we went short right there. It's been quite successful. But these things are relentless. We might have a good rally by the end of the day. It doesn't matter. You got to know your chart patterns. You got to know what to do. Now, here's something that's very important. When I'm looking at the different sectors, I'm always looking at least to see what happens if there is a gap up to a peak of a leg of significance, which could make a peak. Let's look at Apple. Apple was in leg D yesterday, having pierced the 133.60 previous high, which I'd call G. There was no other way to count it, really. And then we had an A to a B, which failed, went to A, B, C again. Actually, let me do this. This is the wrong way around. I need to change that. That's the up arrow. This is the confirmation. And then it went to peak C, and today we've got leg D, and it runs to 134.54. And then drops very sharply to 129.48. That's the deepest decline that Apple's had in a very long time. In the weekly chart, I'm calling it E for now. I might have to change it to a brand new leg A. A leg A. but at this particular point, I don't have any problem calling it E because the MACD seems to be deflecting lower. It hasn't crossed positively yet. Now, the slow stochastic's way down at 77 instead of being over 80%. So now it's for Apple to prove that it can break out into the 135s, and it has to do it within a couple of days. It has to do it between, so today's Tuesday, by Friday at the close, it should have made a new recovery high. And that will say, don't rule Apple out yet. And then yesterday, it had gone to a gap up to a peak F in the 120-minute chart. I always look at that. Look, we've got potential peak F in the daily and the 120-minute chart, leg D in the daily, which says be careful, potential leg E with a failing technical picture. This is something I'm watching really closely. Why? Because the spike today after the earnings news had it spike a little further and it went in leg G. Now, what happens in a leg G in certain instances, they don't actually turn out to be quite as powerful as an FY, because instead of pulling back sharply, they add that extra bit of strength, which takes away from some of the weakness. Doesn't mean to say you can't go down, but I've noticed that Fs can be more devastating to the downside. Doesn't matter what it's a time frame you're looking at, right? We're looking at the 120-minute chart. There's not a monthly, there's a 120-minute chart. So it can be devastating to the time frame involved, but a G can sometimes ameliorate some of that selling so that you actually get support higher up before, and then it bounces, and then later it'll go down. So I'm watching this really closely over the next 2 days. Why? We haven't even got a peak D yet. In the monthly chart, it's F/B. My preference really is to think of it more as a B, because it is really, it's the engine, it's the driver. I mean, people are being forced into Apple. You know, my wife went from her little Verizon flip phone, which finally broke the other day, and she said, okay, I've got to get Hippocrates, and that's the medical, basically the textbook, onto the thing and all. I have to catch up with the youth in my in the practice, who seem to just go around the iPhones like lightning. So I'm going to get that. So she got the iPhone. So, and as she was walking into the Apple store on Saturday, there was an elderly couple walking out, and he said to his wife, well, we're finally in the 21st century. That's exactly what we felt like. Okay, so yeah, we are in the 21st century. Apple's the one that's taken a lot of people into the, and once you're there, it's really hard to get off the Apples because they really work so smoothly. They integrate so many different things. So I don't see Apple having anything other than a large consolidation. Maybe it could even be a 6-week to a 2-month consolidation if it pulls back. I'd say not to say you can't short it, but it isn't the big short that I would expect for some of the areas. So I'm looking at that. I'm saying, let's see what Apple does, because it's impacted the Qs earlier on, and now the Qs are coming back from the 9-period exponential moving average. I'll be right back. Basil Chapman will talk a little bit more about my webinar tonight at 5:30. Right there, go to the front page of TFNN and sign up. It's basically free. It's going to be terrific.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. What I'm doing here is I'm showing a chart formation. And this chart formation is of Merck, MRK. I was asked about it, and I've got, I said 60.05 up 2.95, must have gapped up on earnings news. It's in leg D, a gap up to D, something I always watch real closely. It went to an A to a B and then recycled, started a brand new inside buy signal to buy mode, and it's gone to, and I didn't really, on any of these, I didn't really get the buy signal to buy mode officially in the technicals. It did it in price, and this gap up, in fact, completed it, but I'm suspicious. Now, this is what I'm looking at. I believe that Merck, which is part of the Dow, I'm going to look at Pfizer in a minute, is possibly in the weekly chart making a head right there, left shoulder, right shoulder. So the whole 61s area, it's at 60.04, anywhere from here to 60 point, let's call it 61.30, somewhere around there. If it can't break above and then starts to turn down at any point, if it goes, this is under 59, all right, let's make it 58.70. If Merck closes under 58.70, there's a real good chance that it's going to fail. It has made a peak E in the monthly, and it's just been a spectacular stock. I think it deserves more of a timeout. Look at this. It's going back all the way to, let me move the chart. Look at this. That's right. I remember. I'd almost forgotten about it. Merck made the perfect left side, right side twice extension. from way back in 2002 when it was in the 60 to 61 area to the 61.62 top that it made at the end of 2007. That was in December of 2007. To the peak E-top that was 2 bars late in this exact left side, right side price time with the Chapman Wave inside wedge coming right in there. Right, isn't that amazing? Look at that. Let me expand it so that you can see. Look at that. Perfect. That's where that entire left side to the right side price time match plus the Chapman Wave inside wedge target line goes to right there. And I think it's just consolidating. It's been a spectacular stock. Just needs time. That's the way I'm looking at it. I'm wrong if it goes to the 63.50 area. Certainly, if it goes to a new all-time high above 63.62. I'm wrong if it extends. Oh, that'll make D in the weekly. Is that right? Yeah, that'll make D in the weekly. I think it's going to have a tough time. That's the way I'm looking at it right now. And PFE, which is also in the Dow, Pfizer, it didn't do that. It went to peak F right there, or C1, C2. It's pulling back sharply, and that's a leg E going to a peak E in the weekly. Yeah, and Pfizer is already under its it's in its consolidation mode, but the monthly chart has not yet given a sell signal because it's only last month. This month, it's already hit a new all-time high. So it's going to take a little while to make that a peak, to confirm that that's going to be a peak in Pfizer. Holding very well, high-level consolidation at this point. Okay, now let's do a couple of things. Let me just remind you once again, I'm doing a webinar tonight. I'm going to discuss all these chart patterns that we're looking at, why certain things have happened, what we can expect. Is this rotation going to take more time than price? Are we going to get that sharp pullback that says, hey, this is one of those times we're going down double digits, or have we already been? Look at this. The Dow has been in this sideways consolidation for most of the year. I'm going to pull that chart all the way across. Look, it did drop below the 17,600, 500 support level, went to 17,000 back on the 2nd of February, but it also in December was at 18,103. So basically, it's other than that little drop, it's been in a trading range most of the year. So if it continues just to consolidate sideways and then start to move up precipitously, breaking 18,350 in May, I'm going to have to say, whoa, we've started the next phase without using up price, but more time than anything else. But the next up phase, I'm expecting, so far, everything I'm looking at suggests that it'll be after a deeper consolidation and that we could go into May. Still consolidating. That's just the way I'm looking at it at this particular point. But, you know, I have to keep saying, what do investors have as an option? So let me just put the page up now as we go to the break, or maybe my engineer will do that. That'll be great. And just remember, tonight at 5:30, you've got that webinar coming up. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So what we're looking at here is the VIX index. The VIX index hit 14.23 today. Remember yesterday we were talking about it when there was no real sell-off in the market. And what we're looking at here is that the VIX hit 14.23. Now it is trading at 13.08. It hit a low of 1289. So how the VIX closes today is going to be I wouldn't say just today. How it closes today going into tomorrow during my show, that's going to be really important the next 24 hours. More importantly, what we're looking at here is that in the weekly chart, that 9-period exponential moving average at 13.84 has just been a strong repellent. So we want to see whether or not there's power enough by Friday to move above it. So the question I had was, would the S&P get to the, 2125 level? So let me just do this. So the way I'm looking at it at this particular point is, I need to see the close. Look at the tails. Let me just show you this. Actually, I'm going to show you the SPY because the SPY gives it a little bit clearer. In the SPY, I'm going to be talking about this a lot tonight. But look at the SPY. It made a doji candle high at 212.24, and that was on the 25th of February. And it comes down to 204.12. I drawn the left side, right side, price time match with the fulcrum, the plumb line right there the low of the 26. When it did that exact move to the right side, I also drew in a Chapman wave inside wedge, and that wedge went to yesterday, and it should have hit 212.24. And before that, the weekly chart was only in leg C1, C2. It hadn't made a D. And what happened was there was a move up yesterday before the sharp sell-off, and it went where? It went right to 212.48, 24 cents higher. Leg E after a doji candle, and then it came down very sharply this morning. Now there's a rally, a very nice rally. S&P's up 3 at 2112.18, and the SPY is up 0.38. You got to respect what's happening in the market if it doesn't do what you expect. And what I had expected was that there was a good chance today or tomorrow that the SPY would close underneath 210.48, which is the 9-period exponential moving average. So far, it hasn't done that. It's sprung back. But what is fascinating is the stochastic remains at 84%, which is good, and the MACD is still good. And that's giving you that internal strength. But there also has to be something going on to do with news or whatever it is. Maybe it's Greece. I don't know what it is. But there is some news event that has caused the deepest sell-off that we got and then caused the reversal to the upside. So we need to wait for the close. What I will say is this, that based on the 120-minute chart, which made a peak E and then pull back very sharply, unless there is just a slew of buying that continues all the way through the day into tomorrow, my anticipation is that somewhere in the 211 to 211.70 to 212.10 area, there will be a failure. I'm not sure about 212.10. In fact, I think it would have to be 211.60 to 211.88-ish. At that point, I think there could be a failure. But if there's not, then you have to just say, look, higher highs and higher lows, higher highs and higher lows. This is another one that went down, and you got to expect that there's a chance that if you break 212.48, then all of a sudden that really weird spike to 212.97. It was a trade, or there were trades at that level. It was an aberration completely. They were prints, so they had to keep them in. They couldn't change them. Nothing traded there 5 minutes before the bell on the week of the 19th of December. So that aberration of 212.97 could, in fact, become a target. It happens sometimes. You get these weird inflections, and that's all I can say. That I don't know. I at this particular point, my bias is still to be looking towards the softer side of the market. We'll just have to see how it plays out. What's going to be dependent on whether the IBB is able really to garner enough strength to get to the 356 level by Friday. I don't think it's going to do that, but thinking and actually and actuating, I don't know. There's a big difference. So let me leave it this way, that if there's a strong close today and the SPY, the S&P gets close to SPX.X, if the S&P gets close to the open between this afternoon and tomorrow at noon, gets close to the open yesterday of 21.19, then I have to say, hey, that's a remarkable turnaround and tremendous bout of strength. But my thinking here is that both there was an aberration for that extra move down the Dow to over 100 points down earlier on. I'm not sure it made that, and now the reflex rally. I would have expected that it would have been a much narrower range today, with a lot dependent on the IBB, how it closes. Why? Because it's been such an important component of the overall marketplace. Question about gold. You remember yesterday I had a call from Suzanne in Canada on the GDX, and she said in the Chapman wave methodology, which she's studying with her son, what would you expect from the GDX? And what I said was there's a pattern that I call the falling axe. It's just a declining, expanding cone formation, and like a wedge. and that it had already broken out, but it needed to close so that it showed it could break above a peak C, which is at 20.23. But because there was a deflection in the MACD, the fast moving, that green line on the MACD, because it was a deflection up, there's a good chance you start to make a leg D. And then if you were going to get to the 20 I can't remember offhand, I think I said 20.48 to 20.62, if I remember correctly. I wonder if she's listening. Maybe she can even call in to confirm. I had said if you could break into that area and close there, all of a sudden the magnet of 21.09, which has just been dormant, you didn't even have to look at it for a long, long time, since February when it broke down from that level, February the 5th, it broke down, the next day actually, February the 6th, it broke down and it couldn't get back. This is the closest it's been. Well, there was one attempt back on the 27th, but that failed. So this is leg D, and this is the one that says, when you're coming off a major bottom, you can not only recycle higher, but you can get a number of leg Ds because you've changed the trend. I don't believe we've changed the trend yet in the weekly chart. The daily chart is acting pretty well, but the weekly chart is the one that's coming right up to I believe that is the, let me double check. I think it is 32. Yeah, the 32 period exponential moving average, which at this particular point is at 20.70 and it's trading at 20.44. That is the market vectors gold minus ETF, GDX trading at 20.43, up 67, a good move, up 3.42%. That is a very good move. Now, what's fascinating to me is we had the equivalent to the GLD, just got stopped out for a little bit of a gain, and now it's actually pretty much doing what we were hoping to see before. But I'm also looking at gold and I'm saying it is so dependent at this point to a breakdown in the dollar, which actually now is going to the 96.10 level. And what I'd said yesterday is, yep, the 96 is important, but if the dollar closes under 95.70, I believe I said 95.70, I wanted to give it some room. All of a sudden, you've got a change of trend, and that impacts the weekly chart, which says maybe it isn't a B, it's going to be a PE. And all of a sudden, you've got gold that is possibly in play. This is the first time that I can say there's a chance that you've got gold in play for a move in the arch formation, that if it takes out, the GLD takes out 117.47, which is the peak the week of the 10th of April. It's trading at 116.39 right now, 1.06. All of a sudden, we're looking at dollar coming down and gold starting to move very nicely to the upside. Yeah, that's it. So, and the 120-minute chart has just got a very strong leg B, possibly a peak B. And if it's able to hold support at 115.50 without touching 115.27, the 9-period moving average, which is also the 200-period moving average, but instead by this afternoon or tomorrow is actually testing 116.72, that's going to be very good action. So I'm looking at the relationship. There had been a very strong relationship going back years. Oh, I can't get it right now, pity. Where the gold and the dollar go inversely like a mirror image many times, and they can do that for long periods where there would be maybe 4 to 6 weeks in the entire year where they're actually going in the same direction. Most of the time they're in counterpoint. And at this particular point, finally, they're starting to maybe go into counterpoint. I'm not 100% sure about that yet, but look at this pattern. Remember we talked about the declining trend lines? I'll be teaching some of that tonight if we have time. Look at that trend line. And look, in fact, it's even a channel line if you want to think of it as parallel lines. So channel line to there, exactly, right there. And we can do the same thing to the upside, another technique that I like to use, but I don't do it very often. And that's right there. And that's showing you the resistance that the GLD would be coming into, which is just a tad over the high today. It's at 116.59. The high was 116.51. And it's showing you that that left side entire area of support is going to be very important between 115.78 and 115.50. So that's going to be very important. Good. So to sum up, what we're looking at is the volatility index is becoming more and more important now. Why? Because it did react positively for the VIX index, negatively for the market yesterday, and then intraday today, and now it's giving back a huge chunk of that. It's down at 7 cents. We'll see where it closes, because if it's able by the end of the day, if there's another selling spree in the market, the Dow closes down 30 points, S&P's down over 4 points, then you need to have the composite index as well down. Composite index now is down 2 at 5,058. Spoke about Apple. I think Apple's now a bit of a weak link, at least short term. So that's going to be very important to see how the VIX is able to either garner energy to come right back towards the 1350s, or if it closes in the 12s, even if it's just 1290, that's just going to say buying pressure is excellent. Don't get in the way, because there's still enough buying power to allow for a little bit more of a rally in the market. So that's that. Now, the IYT is something we've looked at very often. My feeling was that the IYT, which is the transportation index, is really making a significant top. The weekly chart has gone to a peak F way back in November of last year, the week of the 28th, went to 167.80. It's only at 157.65 now, but it's taken all this time just to stay in a range between 152 and basically 166. And the monthly chart is at a very critical period, because if the transports start to weaken, and on Thursday at 4 o'clock, the last day of April, there's a close in the IYT, the iShares Transportation Average ETF. That's going to suggest that there's weakness in the transports. You remember, I've been talking about, and I still don't know, and I won't know for a while, about a softening in the economic area over the last, it's now about 5 weeks that I've been talking about. So it's about 5 weeks. And the Dow's action would suggest, because it's got cyclicals, it's got the heavy duty industrial stocks, it would suggest that there has been a slowdown. And high-grade copper would suggest that there's been a slowdown. Look, high-grade copper, it's acting okay right now, but it's basically been in a trading range, and it hasn't broken out to the upside to get back into the threes. It's at 2.78. So those are the questions that I wanted to answer. So the answer is, I don't think at this particular point we will get that 21.25 in the S&P. That's thinking. That's different to your trades. So just keep that in mind. And the other thing that I had a question about here, let me just double check if you don't mind. It's coming up right now. That was yes. And the other question was, will tonight's webinar and next Tuesday night's webinar be archived? And the answer is yes. For those who can't make it, absolutely, it's archived. It's going to be 5:30 to 6:15. So I'll talk a little bit more about it in a moment, but I just wanted to mention, yes, archived, absolutely. You need to, there's some charts that I want you to be able, and chart patterns that I'd like you to go through quite thoroughly. Now let's look at United Technologies. This is more an intermediate term indicator for me, one of my Dow Quartet. It's rallying right now, but the monthly and the weekly chart are really not looking that good. And GE, my short-term little pilot light indicator, is down 8 cents. It can't go anywhere. It's just kind of stuck. So it's not a negative right now, but it's just saying, hey, I don't show too much strength. I'll be right back. Basil Chapman, Tiger Edition.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And a couple of things that I wanted to go through. Most importantly, I want to do just so it's Merck. I think Merck is actually one of the stocks in the Dow that's giving it some strength here. Dow's at 57, S&P's only up 367. But I also want to just quickly look at the euros breaking out. So that is going to turn into a much higher second arch formation right there. So euro right now is at 1.097. So it's up about 0.80%. And now what we can do is we can say there's a chance that instead of doing a little arch formation, we can have a larger arch formation as the dollar takes a big breather. And that would suggest that if this rally in the euro continues, it could go to the 1.22 area. It's at 1.097 right now. That would take a few weeks. So, and of course, coming up straight after me, you've got an options hour with Chad Coco. And Chad Coco does a absolutely fabulous job with options. So this is a perfect time to be listening to what you can do in the options market, especially in a market like this. So let me do this. Don't forget, he loves to take calls. Give a call to Chad. Now, I wanted to go through one more time. Just if you're looking at Tiger TV, let me show you something before we put up this slide for the upcoming webinar tonight. I'm going to be talking about trend lines. I'm also going to be talking, because there are so many arches and cup formations that have been forming, I'm going to be talking a little bit about that. I'll be showing a lot of charts. But what I'll also be talking about is where where and when do these things change pattern? You know, there's a pattern that I call it the Sears H that goes to a cup formation. Well, we've seen some of those, but then we've seen them turn around and fail at a certain point. Did you mean 1.12? Sorry, 1.12. Yes, thank you for correcting me. 1.12 on the euro. Whew, big difference. Okay, and the monthly chart still looks terrible, and the stochastic's flat, but the weekly chart is showing some kind of energy. So if I remember, I'll put it down now in my notes. I want to look at the weekly chart of the euro because I want to show you rising, there it is, the rising technicals, and yet so far there's not been a price performance that's taken it above the previous highs in March. And that says there's either going to be a catch-up or a failure, and that's going to be really important to this particular pattern, how the MACD and stochastic work. So I wanted to show that. Now, let me just talk about, if we can have the slide up. While we got the slide up, I'll show you, I'll talk about what I will be discussing tonight. I'll be discussing some of the patterns that we've seen that are very familiar now to my subscribers, but perhaps if you're new, you want to learn about them. I'm going to talk about how you can go from a buy signal to a buy mode. And sometimes by the time you recognize that it's a buy mode, you might find that you've actually missed the heart of the trend. But it doesn't matter. I'm going to talk about how the plus sign can go to an up arrow. I don't usually start straight away. I did in one chart. Now, where was it? Oh, I do so many charts. It was perfect. I put a down arrow. I don't think I'm going to be able to do it. Let me just go to Amazon chart. Yeah, Amazon has got a peak F in the daily with a gap. Remember on Friday I said, I'm always very nervous when I see a gap on a Friday, a gap up on a Friday on earnings news or some kind of news-related event going to a DE, but especially an F. Why? I don't know what it is, but for some reason, when that happens, that particular pattern very often fails. It's like it's an emotional run. And look what's happened. Amazon made a high of 452.65 on Friday, and right now the low of the day is 432. That's a pretty big move on the downside. We're going to be watching things like that. Please check out the front page of TFNN. See if you have a chance to be able to, if you're interested, we're doing 2 webinars this Tuesday night and next Tuesday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.